Welcome to Alpha Recap. Markets close mixed today, and we've got a lot to unpack. Analyst moves, a hot space theme, some targeted M&A, and a handful of quiet signals that could matter down the road. As always, if you have questions, you can reach us at stockalpha.ai. I'm joined by Ben to break it all down. Ben, good to have you on.
Thanks. Great to be here. There was a nice amount of actionable color today across payments, consumer staples, and aerospace. Everything from concrete price targets to thematic notes, and even a search spike that traders will want to watch.
Let's start with the headlines that gave investors something concrete to trade on. Piper Sandler raised its Starbucks price target to $103, tied to fiscal year 2028 assumptions, and TD Cowen reiterated a buy on Visa. Walk us through why those moves mattered today.
Those are classic analyst signals. A raised price target, like $103 on Starbucks, gives investors a benchmark to measure the current price and management guidance against. It's not just wallpaper. It implies assumptions about store growth, international rollout, and margin expansion through fiscal year 2028. The TD Cowen reiteration on Visa told the market that payments fundamentals, things like total payment volume and interchange trends, were still healthy in their view. When analysts do this on big names, it often ripples into peer stocks and sector funds.
So, when you say it rippled, what should listeners look for? More ETF flows, options action.
Exactly. First, you watch for flows into exchange-traded funds that track consumer, discretionary, and payments. Fund managers and algorithmic strategies sometimes use fresh analyst notes to tilt allocations. Second, you can see increased options volume and tighter interest in payment processors and coffee chains. And third, follow-up notes matter. The full write-ups will show the assumptions behind the target, like projected transaction value growth and margin moves. Those assumptions tell you whether a target is conservative, aggressive, or somewhere in between.
And we're speaking in the past tense. Those notes were published and investors reacted today. Any specifics on what to watch in Visa or Starbucks next?
For Visa, look for volume metrics, merchant activity updates, and any regulatory chatter about interchange. Those are the levers. For Starbucks, listen for commentary on store maturation, comp store sales, and international expansion cadence, especially what management expects by fiscal year 2028. If either company updates guidance, that's when the analyst call becomes tradable news.
Switching gears now, Morgan Stanley published a thematic note on space, and separately, Google Trends showed the search term helicopter spiking to do about 20,000 searches, up 800%. That feels like an odd combo. Why did both turn heads?
It was a potent combination. The Morgan Stanley note provided institutional framing, essentially saying, hey, we think space infrastructure and related services are worth rethinking. Institutional calls help re-rate suppliers, operators, and thematic exchange-traded funds over a multi-year horizon. Then the retail signal, that helicopter search spike, brought a short-term, headline-driven component. When institutional attention and retail interest collide, you get both the narrative for long-term allocation and the liquidity events that can create quick price moves.
Which names do traders typically associate with this kind of theme?
In the aerospace and defense arena, people commonly watch legacy contractors like Boeing, Lockheed Martin, and industrials like Textron, plus a host of specialized suppliers for sensors, launch services, and satellite components. For space-specific plays, there are suppliers and operators that could be re-rated if the note names them and lays out a revenue timeline. The thing to remember is that some of these names are also defense contractors, so defense budgets and procurement cycles are part of the valuation story.
You mentioned liquidity events. What could retail attention do intraday or over a few days?
Retail attention can spike options volume, widen bid-ask spreads in smaller names, and cause episodic volatility. If retail piles into a handful of space names, market makers widen spreads to protect themselves, which can exaggerate price moves. That's why traders often watch options activity and retail chat volumes alongside institutional research.
What should listeners look for next on the space front?
First, wait for the full Morgan Stanley report. It should name target companies and lay out revenue timelines and capital expenditure cycles. Second, monitor company press releases and any FAA or regulatory updates that might explain the helicopter search spike. If one of the big contractors posts an operational update, that would change trade setups quickly. And third, watch for follow-up coverage that could move exchange-traded funds and thematic funds tied to space.
Let's hit the M&A and governance items that came through today. Impact Climate Technologies acquired Larry Wunsch and Associates, no price disclosed, and Ruckin added 2 technology veterans to its board. What's the practical significance of those moves?
These are classic mid-market signals. The Impact Climate deal is a footprint expansion into commercial HVAC and plumbing distribution in San Antonio. Even without a disclosed price, the strategic rationale matters. Distribution deals like this can add regional revenue and improve logistics. With Rakin, board appointments of technology veterans are often a prelude to scaling product and go-to-market efforts, and can hint at upcoming partnerships or capital raises. Both moves are incremental, but they're worth noting because they signal active corporate development in climate and construction tech.
So traders shouldn't rush to buy on the headlines, but should keep these names on a watch list for follow-ups.
Exactly. Treat them as watch list items until we get purchase price, revenue contribution details, integration timelines, or specific product roadmaps. Those follow-ups are what create earnings or valuation impacts.
There were also a series of awards and industry programs. RES winning an Environmental Business Journal award, Propel People getting a ConstructTech Top Product Mention for 2026, PMMI launching an SMB Fast Track with PAC Expo East 2026, and a leadership hire in healthcare. These felt softer, but still relevant. How should investors process those?
These are what I call soft signals. Awards and trade program recognition rarely move immediate earnings, but they can translate into customer wins, preferred bidder status on public projects, and faster sales cycles. For example, the RES award around Klamath River restoration could strengthen its chances on future public sector contracts. For companies like Propel People, product recognition can accelerate customer acquisition if buyers take notice at trade shows. Investors should note them, but wait for contract wins and confirmed orders before treating them as catalysts.
Quick bullets. Summarize the fast-paced updates for listeners who want the highlights.
Sure. Morgan Stanley spotlighted the space sector. Institutional interest rose. Piper Sandler raised Starbucks to $103 on a fiscal year 2028 outlook. TD Cowen reiterated a buy on Visa, supporting payment sentiment. Google Trends showed helicopter searches jumped to about 20,000, up 800%. Impact Climate Technologies acquired Larry Wunsch and Associates. No price disclosed. Raycon added 2 tech veterans to its board. RES won an environmental award. Propel People was named a ConstructTech top product for 2026. PMMI launched an SMB Fast Track tied to PAC Expo East 2026, and Laurie J. Morgan joined the Exceptional Women Alliance.
Let's pull back and talk patterns and what this all might be telling us about market behavior.
There are a few clear patterns. First, thematic rotation. Institutional firms are amplifying niche, long-duration themes like space, while analysts continue to back steady, cash-generating names in payments and consumer staples. That suggests a bifurcated appetite, some investors going for long runways, others sticking to cash flow. Second, convergence of institutional and retail attention. Morgan Stanley's note, plus the helicopter search spike, shows how a theme can attract both long-term allocation and short-term speculative interest. And third, mid-market M&A and board moves indicate active corporate development in climate and construction tech, which could foreshadow more deal flow.
What are the most actionable things traders and investors should watch tomorrow and in the near term?
Number 1, the full Morgan Stanley Space Report. Names, revenue timelines, and valuation frameworks. Number 2, follow-up analyst write-ups from Piper Sandler and TD Cowen for model assumptions and risks tied to Starbucks and Visa. Number 3. Any FAA or company statements that explain the helicopter search spike that could materially change how aerospace names trade. Number 4. Disclosures on the impact climate acquisition, purchase price and integration plan. And finally, keep an eye on retail spend data and payments volumes that could reinforce or contradict the analyst calls.
Before we wrap, explain for listeners how they should think about analyst price targets and reiterated ratings versus actual company fundamentals.
Price targets and ratings are analyst opinions built on models, revenue growth, margin assumptions, capital spending, and sometimes discounted cash flow math. They're useful because they force a view that's explainable and comparable across names. But they're not gospel. You need to look under the hood. What did the analyst assume about growth rates, margins, and market share? Are those assumptions realistic given competition and macro conditions? Reiterated ratings tend to signal confidence, but without fresh data, they can be a flag rather than a trigger. Always pair analyst signals with company-level fundamentals and timelines.
All right, Ben, give our listeners 3 clear takeaways from today's action.
1. Analyst moves mattered. The Piper Sandler Starbucks target and TD Cowen's Visa reiteration provided concrete benchmarks that could drive flows into sector funds and specific names. 2. The space theme gained traction because institutional research and retail attention aligned. Wait for the Morgan Stanley report and any regulatory or company statements to separate noise from signal. 3. Small M and A deals and awards are soft signals. Watch for follow-up disclosures like purchase price, contract wins, or product rollouts before assuming they'll move earnings.
Great summary. That's a wrap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next market day.